2014?
Yeah, I was definitely a lot younger than I am now, and how I feel now, I've got to say. Long time ago, mate.
It's hard to believe that any of us could be younger than we are now, Jeff. Look, we're going to have a look at this market. We're going to divide it up and look at it from a few different points. We're going to start off with Ash, then we're going to go to Gordon, then we're going to go to Jeff. Yeah, just waiting for Gordon to come in. I do hope there's been no problems in the US. Let's start with US. How are we looking at the market today?
Oh, mate, do you know what? There's lots of really, really interesting data at the minute with what's coming from the COT data, and the seasonals kind of don't back up everything. So, and I'm not sure whether some of them are a little bit risky, but one thing is screaming, and it was screaming last week, and yet the timing might have been a little bit off. Is the Aussie CAD. You know, the Aussie CAD as a potential short is it was the call last week, and it's going to remain the call this week. The fundamentals have changed a little bit because we did have Jerome Powell out on Friday at Jackson Hole. I don't think he said anything that was that shocking to the market, but the market did react very negatively in the end, and it was just about going after inflation. You know, we know it's the same narrative. They still kind of keep going on about that. That would have suggested that the US dollar would explode to the upside. It did push those highs. And while it's doing that, it's kind of dragging the Canadian dollar with it. So as much down to do with kind of where things are in the neighborhoods, the Canadian dollar looks pretty positive. But look at the COT data. I mean, this is the net speculating positions. The highest it's been all year. I don't know if that's really clear on my charts here, but it's the highest it's been all year for net long positions on COT. This was it last week. So when I was reading it last week, it was starting to build. Not quite as the highest point over here, but it was starting to build. This week, we're actually seeing it push beyond those points and actually getting really bullish. You know, it's at an extreme up here. Now,
sorry, Ash, is that the COT for the CAD or the US?
This is for the CAD.
For the CAD, yeah.
This is for the CAD. I just wanted to sort of give a little bit of context about the US and how the US and the Canadian dollar, you know, they kind of work together in some regards. You know, when one goes, the other one tends to have to follow because of geography. So the policy from the Bank of Canada will probably stay in step, closer than anybody else, closer to the Fed than any other central bank potentially. But the COT data is certainly suggesting that the Canadian dollar is very, very supported. It's hyper supported right now by the speculators that report on the CFTC. Sorry. Now, if we go over to the Australian COT data, not as extreme as it was. You know, certainly at the start of the year, it's very extreme. But I think significant that it is building lower. You know, we are starting to see that the enthusiasm come away from the Australian dollar. Both of them are linked to growth because they both are commodity currencies. But and we're seeing oil as well. You know, if we were to bring up a chart of oil, we're seeing that the confidence in oil come off a little bit. That the concerns about recession are there. I think it probably affects the Australian economy more and potentially the Australian dollar. So what we got is a situation where the Australian dollar COT is telling us that the net shorts have really got control over the positions in the COT report, and the Canadian dollar longs have got the control of the positions. So COT data points us to an Aussie CAD short. Now, if we then bring up the seasonals, which I'm going to have to share on this.
Before you go to seasonals, do you mind if I ask you, is the momentum here important? So I can see that we've got long-term high for buyers of the CAD, but there's also momentum is growing, and same with the Aussie. Momentum was growing for the shorts. Does that take a part of this for you?
In regards to the COT data, you mean?
Yeah.
Yes, it does. Yeah, it does. Yes, it absolutely does. Because actually, you know, I'm not going to talk too much about the stocks. But what is actually very interesting with stocks is that even though they're bearish, momentum seems to be switching. to the other side. So we might well not see, we may not see the collapse in the stock market that I think many people probably would anticipate after what happened on Friday. It may not continue to move down quite as extreme in quite an extreme way, because momentum has shifted actually back to not be quite as weak. It's not strong, but it's not quite as weak. So yeah, I would definitely use momentum. I mean, the fact with the Aussie and the CAD is not only is momentum strong for the CAD, but the trend is also up. So an example in the other direction might be that let's say.
Mate, are these your personal charts?
Yes.
Pretty cool, mate. So
Yeah.
you make these yourself off the data, right?
Yes. Yeah. So yeah, just make them up and you can start analyzing the data in just a bit more detail. This would be an example of how you've got this point here to this point here. The trend is still up. It's still above the zero line. So the trend is still up, but the momentum has shifted, to the downside. I think what's quite telling here is we got up, 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 up. The momentum's up, the trend is up. Same with the Aussie. The momentum's coming down and the trend is down. So this would be a relatively strong signal for us. So we are looking for the shorts. Now, if you bring up, we'll look at the seasonals in a moment, but look at this as well on the signals here. What happened right at the end of last week? This huge selling bar. And okay, you've got patterns over patterns. I'm sure people see an inverted head and shoulders. They see a head and shoulders. So there is a little bit of confusion in the charts down here. But Friday's bar, I mean, the fact that we were relatively stable for most of the week would suggest that the call last week was wrong. But we do have to bring in the fact that Jackson Hole was a premium event of the week. And it might have just been that the timing was a little bit out last week, trying to get ahead of that Jackson Hole. Maybe the idea should have been to wait for Jackson Hole and then start to look for positions on the short side for Aussie CAD, because now the chart is suggesting that could happen. It's not definite, but the overall market move here is still down. It hasn't really broken to the upside. A little bit of consolidation down here. Very weak bar on Friday after the premium announcement. Then you've got the COT data suggesting that you've got an Aussie CAD short. It is starting to build, in my opinion, for that particular signal to be something that we should look for. Look for some sell signals.
Mate, can I just join in here because,
yeah.
Sorry, this is going to be the only thing I've got on my watch list, seriously, this week, and it's not going to be the way you're thinking. It's going to be in completely the opposite direction. And if I can point you to that weak candle as a result of the symposium, if you like, or what Powell said out of the symposium,
yeah,
doesn't that kind of give you the impression, that one, yeah, doesn't it kind of give you the impression that if what Powell said was strong enough, it would have driven it back through that candle and down? And therefore, if there's a rally above the high of that bar, isn't that, if you like, the longer, the stronger inverted head and shoulders going to take over? I think there's a case for both, isn't it?
Yeah, undoubtedly, mate. I mean, there always is, isn't there? There's always a case for both, and it'd be interesting to talk on Monday about this stuff, because yeah, you will bring in a different opinion on the technicals, and when it comes down to it, I brought the chart up just to sort of show that there's some interest here on the price action, but actually it is about the COT data. I wouldn't get too tied up in the charts as yet. So I'll be looking for short positions, but purely because the COT data would suggest that that's what I should do. But you're absolutely right. Things could turn around, and maybe the technicals aren't suggesting that that's what we've got. But when I look at this, I think that there's a case to be made for it. I guess that's the main point here.
Put your boxing gloves on for tomorrow, mate. We'll have a good chat about it.
Yeah. Well, these are the seasonals as well. So this is the seasonal picture. And what's quite interesting about what you're saying, in some respects, and what might end up happening is that we might both end up being right because of timing. You know, it might well go long for a period. There is actually a neckline. We won't go back to the chart now, but there's a neckline that suggests that we could get a little bit higher in Aussie CAD before we collapse. So the timing is going to be key. But until that COT data changes, I will still be looking for short positions. The seasonal suggests that September is lower with a rally around about midway through. So, you know, we do have to sort of take all these bits and pieces into account. It's not just kind of like, you know, Aussie CAD shorts, let's just, you know, sell everything that suggests that we should go short. Because, you know, as I say, the timing aspect might come into play. But the bias, which is what this is about, is really for looking for downside rather than upside.
Cheers, Ash. Any more on that?
No, mate, no. I mean, I could actually talk about it for quite a while, because there are sort of other things that are other dynamics that should be taken into account. You know, like what's happening with the price of oil, like what's happening with a potential recession, and the fact that the demand for oil might come out of it, like the fact that the Canadian government have just managed to do a deal, or they are doing a deal with the European Union to supply their oil. You know, there's lots of things that we could literally sort of like disappear down a spider's web if we want to really get into a deep discussion. But
so, mate, key message here for our people, right? We're looking for Aussie CAD short, and if you're a wave rider trader and you get a chance to get Aussie pairs long or CAD Aussie pairs short or CAD pairs long, that's not a bad place to be this week. And again, get your timing right, get your price pattern right, make sure you get a valid entry. Don't go just smashing into stuff. But if you're a wave rider trader, if you can get Aussie CAD short, fantastic. But if you can get Aussie pairs short or CAD long, not a bad place to be either, right?
I would suggest so. I mean, obviously, so, you know, if we're talking about pairs, then we do have to bring in the other currencies like the euro and the yen. Interestingly, the yen has not shown decent COT data this week after the concern of what happened, you know, of what's been happening in the market. Swissy, different picture. People seem quite keen on the Swissy, but they're not that keen on the yen. So this is where the dynamic is fascinating right now, and where I would actually probably edge towards splitting it genuinely, you know, with the Aussie CAD. I would just say that particular pair is showing some genuine signals. The others you'd have to do a little bit more delving into to get a bit more detail of what's good and what's not. I'm not sure whether I'd go out and out Aussie short and CAD long, but certainly Aussie CAD as a pair, I'd be looking for short.
Cheers, mate. Okay, that's it from you.
That's it from me. Yep.
Mate, you know I love the data. It's always interesting to have a look. And what I really like is what we are going to get here. We're going to get a data-driven view, and we're going to get a technical-driven view. And they may not be the same, but as traders, understanding both is really cool. It's a really important way to learn to trade. And getting some balance around this really does help. Dollar yen long, you like it or not?
Dollar yen long, I would edge towards it. But you know, if I mean, let's have a quick look at the COT data and see what that's telling us about the dollar yen, because as I say, the yen wasn't quite as bullish as I thought it would be, you know, and it has been building. Look at the way that the yen's been building throughout August, but it's just started to come off a little bit. So that would suggest that maybe some weakness could start stepping in. Not particularly weak, to be fair, and that would suggest that maybe dollar yen long may not be a particularly safe trade. But you would probably still edge towards it. When we look at the dollar, actually some interest coming out of the dollar as well, you know, and it has been interesting what's been going on with the dynamic with the dollar, because we know what the Fed's position has been, and it's almost like the market needed confirmation from Jerome Powell's lips this week, even though we all kind of, that's what he's been saying, that's what the Fed have been saying for quite a few months. So if you know, if you tied a hand behind my back and said which one are we going for dollar yen long, then I'd say yes. But then I'd also say there's probably easier pairs to trade this week.
Mate, something has gone wrong with my computer. Can you guys hear me?
Yeah, we hear you fine.